Hello and welcome to the Getting There Show, where we speak with brilliant people and unpack the key influences and decisions that have helped them get to where they are today. You'll get the books, the mental models, the inspirations, and all the steps in their journey to help guide you on your own path. As Isaac Newton said, "If I have seen further, it is by standing on the shoulders of giants." Today's giant is an awesome guy called Zihao Xu, who after a degree in economics and management at Oxford, started his career at Roland Berger, a strategy consultancy. After launching some of his own companies, he made the switch to Octopus Ventures, a leading multi-stage European venture capital investor, specializing in health, money, deep tech and consumer, who have backed companies like Zoopla, Braze.com and Secret Escapes. We discuss a load here, like his tips on getting into venture capital, what he learned from his time as a management consultant, how to value companies with little information, and why insects should be the specialists. We also look at how his risk-taking led him into treacherous conditions in the middle of the Icelandic outback. As always, we make sure to include all of Zihao's toolkit and influences in the show notes, so as to maximise the chances that this show helps you get to where you want to get to. So Zihao, great to see you. How you been?
Yeah, Fred, I'm doing great, thanks, mate. It's been a long time.
It's been a very long time. Good 3 years, I think.
Something like that. Yeah, let's not leave it so long again.
And how's lockdown been?
It's been all right. I can't complain too much, right? In folks who I think work in technology have it very good at the moment compared to lots of people who are less fortunate. So it's hard to complain, but getting bored just like everyone else, I think.
Yeah, I mean, one of the things I love about you are your crazy adventures, like motorcycling through Sri Lanka. So I'm not sure how you've been able to cope without those adrenaline hits.
Yeah, that's been certainly on pause, much to my wife's delight.
So no plans in the making.
Sadly, not just yet. I mean, we've got no visibility on how long lockdown is going to last. I mean, it's hopefully we'll start once again at some point, but nothing immediate in the works.
Cool. So Z, the first question we like to ask is, how did you get to where you are today? So it'd be awesome if you could provide a little potted history of your university up to your current role at Octopus.
Yeah, sure, happy to. So, uni is where you and I met, Fred. So, as you know, I did economics management at Oxford, left uni and went to a strategy consulting firm called Roland Berger. Spent 5.5 years there, kind of learning the ropes of what makes commercial stuff tick. Tried to start my own company or sort of number of companies for a few years. Didn't get particularly far with any of those, but did kind of get my head a little bit into the early stage ecosystem. And in 2016, I was lucky enough to get a role at Octopus. So I've now been at Octopus Ventures for 4.5 years, primarily looking at fintech, crypto investments.
Great. And could you tell us a little bit more about Octopus Ventures? Yeah,
sure. So Octopus Ventures, we've been around since 2007, one of the largest, most active early stage funds in Europe. So currently about 1.3 billion sterling under management, investing in the best seed and Series A and sometimes Series B founders, primarily based in the UK, but with a view to sort of global ambitions as well. So typically writing checks of 1 to 5 million. We prefer to lead deals where we can, but happy to work with others and co-invest as well.
Cool. And you've invested in some big names over the years, like Zoopla and Alex Chesterman's new company.
Kazoo. Yeah, we've been really lucky actually to be able to be involved with folks like Alex Chesterman with Zoopla and Kazoo. Businesses like Graze, Secret Escapes, Calastone. Things across the board from consumer goods all the way through to some of the more niche pieces of deep tech and financial technology as well.
And what does a typical day look like for you, Zihao?
I'm going to have to give that sort of almost quite boring, tired stock answer of there isn't really one. You're often juggling meeting cool founders, with helping portfolio companies, attending board meetings, meeting other investors, going to events. Depending on what's going on in a particular day or week, it tends to vary quite a lot. In the last, I'd say 6-9 months or so, probably spending a bit more time looking internally, focusing on our team, spending more time with some of the newer folks, and helping to build a kick-ass team.
And I know that a lot of our audience are either wanting to get into management consultancy or are management consultants. What do you think you learned the most about being a management consultant that has been relevant to your current VC role?
That's quite an interesting one. So clearly there's a bunch, right? So the bedrocks of what makes a business tick, how to think commercially about a market or about a company in relatively short order, being able to plot out kind of the landscape of how a particular industry might work, and brainstorm ideas about what might win the particular market, and again, quite quickly, and finding ways to test those things have been really helpful. And there's been a bunch of other stuff that I've kind of had to unlearn as well over the last few years.
And I'd love to dig a bit deeper into fintech, because I know that you lead the initiative, The Future of Money, at Octopus. So it'd be good to start at quite high level and discuss why you think financial services have been so ripe for disruption. So why has there been this massive opportunity?
Yeah, it's one of many areas that I think there's lots of opportunity, right? And I think in particular, when it comes to financial services and fintech, the macro of how we like to look at it is, what is money, right? It's sort of in our name, the future of money as our team. We like to go down to the fundamentals of thinking about, what's the purpose of money? And fundamentally, it's a function, or I should say, fundamentally, money is like an entity that helps humans collaborate at scale, right? Our ability to trade with each other and do things and build amazing products and surroundings that hundreds of thousands of people have often collaborated on without having met them, all happens through the medium of commerce, right? Or mostly happens through the medium of commerce. And if you look at sort of how money's evolved over time, lots of it is pointing towards being able to collaborate with other people or trade with other people more quickly, more efficiently, at a more sensible cost, and to do it in a way that's safer and more transparent as well. And if you look at sort of the last 20, 30 years or so, lots of the developments that's sort of had taken place within the financial world kind of mirrors lots of the same developments in the information world, right? So the internet and its effects on the world and its effects on the financial ecosystems that we operate in is clearly a huge sort of impact, has a huge impact, and at the same time is kind of so early in that impact, right? So if you look at sort of diving in a little bit in financial technology and fintech, there are kind of two key strands here, right? So one is, how do we speed it all up, right? So back in the day, if you wanted to trade with places far flung, you would send a ship. It would take months to get there if it got there at all. Laden with gold and goods, and it will take years, right, for them to reach their destination, trade with the local people there, bring the goods and services that we've managed to create in one place, and more efficiently distribute them around the world, and bring back the natural riches of the earth and the sort of results of human ingenuity and hard work from around the world. Now it takes much less time, right? And in part because we found sort of new ways and new infrastructures that allow us to transact in faster ways. And the internet, being a medium for, almost, transactions at the speed of thought, is hugely significant in its development. And the two themes here then are, speeding up transactions, and two, what are the consequences of speeding up those transactions, right? Money is one of these things where we can't let them break, or we can't let the systems break, because it's the knock-on effects are too widespread, and people, value their money a lot, right? It's a very important part of people's lives. So over time, you kind of had a bunch of technologies that help us transact more efficiently, transact more quickly, but then you have a bunch of technologies that help us deal with the consequences of that speed. And from there you have lots of technologies within payments, within the capital markets industry, and then technologies within compliance, things like AML, KYC, and all this other stuff that's coming up to help ensure that those transactions are going to be safe and efficient as well. So, you bundle those two themes together, and it touches so many parts of the global ecosystem that you find that, fintech is pretty all-encompassing. And as a result, there's huge opportunities involved.
That's a really nice summary there. And one of the other things that I've certainly paid a lot of attention to are the sort of incumbent players being quite slow-moving and stuck in the past. So if you think about the banks, for instance, they've got certain ways of doing things. They're quite slow in their decision making, and hence the big opportunity for upstarts who can move much, much faster with greenfield technology as opposed to legacy systems.
Yeah, totally. But it's quite a common trope that legacy institutions are very slow and cumbersome. And while it sort of is true, there have been very good reasons for them to be, right? In the past, if you try to move too quickly, you break stuff, and breaking stuff when it comes to financial services is really frowned upon. So safety first and innovation second, I think, has probably rightfully been the theme, or the sort of the order of priority for lots of these institutions. And I think that with the onset of lots of different kinds of technology today, we're able to have both, and that's why it's so exciting to be involved in the ecosystem.
So let's now take cryptocurrency, because I know that's one of your specialisms. Now, my mum asked me the other day what cryptocurrency was, and I couldn't really give a succinct answer. So why don't you kind of give me a sort of dummies 101 on what cryptocurrency is and why it's so huge at the moment? Sure.
Let me have a go. And by the way, there's lots of focus on the asset price, right? There's lots of focus on the price of Bitcoin and all that kind of stuff. And while that's kind of fun and it's an interesting mechanism to get young people interested, there's kind of so much more that lives behind that shows why it's important. So let me have a go at it. So for me, the main reason why crypto is interesting and potentially really important for society is because it's the first time we've ever managed to create distributed digital scarcity. Right. So what do I mean by that? And I'm going to peel it right the way back. So, apologies if it's sort of almost too basic for you, Fred. But, if you think about everything in the real world, right, most things we care about, they're scarce. And what that means is, for those of you who aren't economists, it means that we can't just create stuff out of thin air, right? Everything costs either resources, time, or human labor, or in reality, all of those things. If I build a house, I can't just create one out of thin air and give it to you and have us, both have a house, right? Either it belongs to you or it belongs to me. It can't belong to both of us. And in the digital world, however, things aren't scarce, right? Because it's just information, and information can create basically for free. It means that if I record a song in MP3 format, I can send it to you, and you can enjoy it and I can enjoy it at basically no cost to anyone. And the same thing is true of, any ebook or any sort of article, or even like whole infrastructures like Facebook, right? If someone wanted to, I'm sure it's a little bit more complicated. I'm sure they sort of just Control-C, Control-V, the entire Facebook stack, and you've kind of got the whole thing again, right? It's things are not scarce. And because things aren't scarce in the digital world, that's what's enabled us to be able to communicate and teach each other things so quickly over the last couple of decades. And it enables us to be a lot more productive than we used to be. It's, getting rid of scarcity is one of the best things we've ever done as humans, right? But sometimes you need to get, that scarcity is really annoying, actually. Sometimes the scarcity isn't useful. It's counterproductive. And those are times, especially when you're trying to represent something in the real world, right? So, we've used the example of, an MP3 piece of music. that can exist purely digitally, and it's absolutely fine, and we can distribute it as far as we like. That's assuming the rights are all sat in the right places, and it's absolutely okay. But we couldn't, for example, put a £10 note as a file on your computer, right? Because I could just copy and paste so many of those, and it wouldn't be right. I'd pretend to have more £10 notes digitally than I actually do in my pocket in real life. So what you need is digital scarcity, right? You need something that is, both scarce, i.e. you can't create more of it just at a whim, and we can operate it digitally, because it means you can transact with it and build on top of it, all of the amazing things that we have with computing, with the internet that we've managed to build over the last couple of decades. So the way that that's traditionally been done is through having these things called centralized ledgers, right? So we give the information to one party that we trust. We know that they're not going to carry on copy and pasting these £10 notes. And as a result, we're able to have digital scarcity. But the problem with that is that firstly, you've got to trust the centralized entity, and sometimes they're not quite as trustworthy as we think they might be. And secondly, because they run that list, or they run that database, in order to innovate on anything, in order to change anything to run in the experiments, you've got to go get permission from the group of people who run that, right? And that's often very hard, because sometimes some of the best ideas often sound very stupid in a committee. My favorite example of this is Encarta versus Wikipedia, right? So Encarta, Microsoft, one of the biggest and most valuable companies in the world at the time, was able to create the source of truth for an encyclopedia, right? Because it's very important that encyclopedia is correct, and therefore we've got to keep it under strict controls. Well, Wikipedia said, well, let's just kind of let anyone have a crack, right? Which in front of any boardroom, I suspect would sound pretty stupid. But because the internet was an open ecosystem, they were able to create it, and over time, guess what? The open ecosystem has out-innovated the closed one. So going back to the first three words that I said, distributed digital scarcity, right? Being distributed means that you can have that open ecosystem to innovate and to experiment and to run things in a trustless way for things that need to be both digital and scarce. That's kind of scratching the surface of the whole thing, but I hope that gives you an idea of why it might be important.
Yeah, no, absolutely. And then how does Bitcoin fit into the crypto currency landscape? Yeah, sure. So Bitcoin, is the original, the OG kind of cryptocurrency. And if you think about, distributed digital scarcity for our base money, right? So most people don't spend a huge amount of time thinking about this, but the characteristics of the money we use have huge implications and a huge impact on how society operates and how economies run. And today, those characteristics are by and large controlled by very small groups of people, right? So in the US, you've got, I think they call it the open, I forget the name, but there's a committee of, basically 12 people that the Open Markets Committee. So a committee of 12 people that sort of run how the US dollar is kind of managed in the US. And in the UK, you've got the Monetary Policy Committee, which is 9 people that kind of run, how the sterling is operated in the UK economy. And, the part of the premise of Bitcoin was, maybe money is too complicated for even the smartest and, wisest and most benevolent of committees to go and run. So what we're going to do is, put the policy decisions, as it were, into mathematical code. And, as a result, anyone can see exactly how this currency is going to be run in the future. And if people trust it and if people like it, they can adopt it. And if they don't like it, they can kind of go elsewhere. And part of the genius of Bitcoin is that, anyone can kind of make a copy of it and say, actually, I don't agree with this particular parameter or that particular parameter. And I can modify this piece or tweak that piece. And I think this will make it better. And anyone can run those experiments, and hopefully over time, the best currency, as it were, will win out. But it's still very early in the journey, and we'll kind of see where it all goes. One of the interesting developments recently that I saw was some institutional investors like Paul Tudor Jones started investing in Bitcoin. And they're not the only firm. Why do you think we're seeing more institutions getting involved?
So there's a number of different factors at play here, right? So firstly, you can't ignore the effects of the pandemic. You can't ignore, in particular, what the Federal Reserve has been up to in the US. If you look at, actually stepping back for a second, one of the base theories of money is that it represents all the valuable things that exist in the world, right? If you have a planet with 10 apples and 10, dollar notes, chances are each apple is going to be $1. If you print another $10 notes, you've got $20 notes and 10 apples. Well, you haven't got 20 apples, I'm afraid, right? So each apple is going to be worth $2 over time. And, there's lots of debate around that, and there's lots of controversy in terms of who believes what. But if you take that as your core premise and you look at what's been going on with the monetary base in the US, the numbers are pretty astounding, right? So I think it was in the early 70s, US monetary base was about $100 billion. And between then and, Q3 2008, it went up pretty linearly to about $800 billion, right? And then, the 2008 happened, and you had a housing crisis that turned into a banking crisis, turned into a liquidity crisis. And over time, the Federal Reserve had to step in. And between, I think it's, August, September 2008, and, over the next few years, they did 3 rounds of quantitative easing. And I forget the exact numbers, but essentially the US monetary base went up by, a few trillion. Over the last year or so in 2020, given, similar disastrous, the disastrous environment in the US economy and the global economy, as a matter of fact, I think it's another sort of 2.7 trillion or so that has been produced in terms of monetary base in the US. So as a store of value, lots of people are getting pretty nervous about the US dollar and are moving to, what they consider safer stores of value. Now, traditionally, that would have been gold. And there was a little bit of movement in gold as well. But I think if you look at some of the characteristics or the technical characteristics that have made gold such a popular store of value over time, right? So I'm talking things like, the fact that you kind of can't overproduce it. You have to put lots of human effort into digging up gold. I think the stat was, the stockpile of gold that exists in the world doubles every 50 to 60 years, which is quite a long time. Every year, the production amount is about 1% to 2% of the global stockpile. So it's really hard to deflate gold, even if you try. Well, with Bitcoin, it's even harder because, the stock to flow ratio or the production function is written in maths, right? No one can mess with it. No one can sort of try harder and create more Bitcoin in 1 year than what people already expect and know is going to happen. So, you've got a bunch of people who are looking for store of value and seeing Bitcoin as an interesting place to go for it. The volatility of Bitcoin is still so high that it makes it hard to really justify today. But long term, some of the characteristics and the incentives seem to maybe be in place. But who knows? So it's all up in the air.
Great. Well, thanks so much for that, Zihao. My mum's going to be very happy once I relay all of that.
Not financial advice, by the way. Certainly not for your mum, Fred.
No, absolutely not. Cool. So let's move on and talk a little bit about tips for people who want to get into VC. It is a notoriously difficult thing to break into, but I imagine it's a hugely exciting and sort of rewarding job. So yeah, what are your tips for people wanting to break in?
It's a lot of fun. So the unsatisfying answer to that, I think, is that there is, unlike lots of other industries, unlike banking, unlike consulting, unlike law, there isn't a straight and narrow path that works for most people, right? Because it doesn't rely on having, armies of grads, armies of smart young people coming in and churning through lots of work all at the same time. it means that actually the skill sets and the paths into VC are pretty numerous. I've not met a single person who kind of didn't claim to have kind of fallen in almost by accident. The same thing definitely applies to myself. But there are a number of themes, I guess, that people can maybe look to, right? So one is you kind of have to have a pretty natural level of curiosity in all of the things that you're looking at, right? Why do I say curiosity? Because firstly, it means that you're willing to dig deeper into absolutely everything that you're looking at because you genuinely care. And secondly, it means that you're willing to challenge some of the assumptions, right? The business that we're in is finding pioneer entrepreneurs who are willing to challenge the assumptions in the industries that they're working in. And if you're going to apply almost kind of secondhand knowledge or secondhand knowledge that hasn't been properly scrutinized to those industries, it almost never makes sense to back an entrepreneur, right? Because the incumbents are so powerful and so strong. So having the natural curiosity to really want to explore the industries that you're looking to invest into, and to be able to really attack and scrutinize the underlying assumptions of how those industries work is really important. Tied to that is then bringing your own perspective. When we're hiring at Octopus, one thing that we really look for is people who are highly opinionated. Whether that opinion is, whether you feel it's well-founded or not, being able to draw an opinion from the scarcity of data that's out there is really important, because you're never going to have perfect information. And being able to form a view and being willing to change that view when new evidence emerges is really important. But having a view and kind of under almost all circumstances and recognizing its strengths and weaknesses is super important. And I guess that final piece, you have to be okay with the uncertainty. You're never going to have a model that spits out a yes or no answer, certainly at the early stage. And being comfortable enough to make investment decisions and deploy capital when you don't have all the information, sometimes you don't even have half the information, is critical as well.
Thanks for laying that out, Zihao. It would be quite useful to talk a bit about an example investment that you have made and your role in sort of making that investment, and then your role in helping that portfolio company.
Sure. Given we talk about crypto, we can dive in there. So, last year we invested in a business called Skew, which is a company that is built two products. It's built a data analytics platform and also a trade execution product for institutional participants in the crypto ecosystem. So actually it touches upon exactly what you mentioned earlier. When we backed the business, it was, sub 10 people, founded by two guys, ex-traders, who knew the derivatives world extremely well and had spent some time in the crypto world as well. So bringing in, those two angles of expertise to combine into a product that is, one, useful from a crypto and crypto derivatives perspective, and two, works within the workflow of traditional financial institutions, was pretty compelling for us. And when we invested, the business had just the analytics product. It was free. They hadn't launched the trading platform. And since then, they've about doubled in size. They've started taking revenue, and especially in the last few weeks and months, of course, seen a lot of inbound interest as well.
Great. And what's your involvement in the business, sort of operationally?
Operationally, we don't sort of try to get too far into the weeds. We recognize that we're not the best people to operate these businesses. That's why we back the entrepreneurs that we do. Where we do try to sort of get involved is where we can help them go faster, right? So for most of the companies that we invest in, we will take a seat on the board. So I'm lucky enough to be a member of the board of directors at Skew. And wherever we see them coming up against challenges or seeing opportunities that we may have seen before, we'll try to guide them in a direction that we've managed to learn some lessons from in the past, right? And hopefully help them achieve their goals in a quicker and more efficient way. The fact with early stage investing is that, or with early stage companies, to say, is that they're always running out of money, right? Unless you're profitable, you're always running out of money, and being able to save a few weeks here and there is always pretty helpful. So that's where we try to be helpful where we can.
And given you see so many sort of startups and scale-ups in your job, do you think they are a good place to work? Do you think they're a good source of learning experience?
They can be. I think you've really got to go in eyes wide open, right? I think understanding the nature of the risk with these companies is critical for someone that wants to work there. And actually, there's one thing that I was thinking about, which is, lots of people will tend to ask the question of themselves at some point, people who are involved in this ecosystem, do I want to go be an operator or do I want to go be an investor? And for me, and, revealed preference, obviously, but the operator or the senior operator equation has never really stacked up for me. And partly is because, I feel like, firstly, you've got to do the job of a VC by picking the right company to go and work for. Secondly, you've got to do that job better than a VC can, because you only get to pick one business, right? With Octopus, we have the benefit of having a whole portfolio with which we can balance the risk. But as someone who is looking to join a startup as a senior executive, you don't have that. You don't have that benefit. You've got to pick one. And then once you've kind of managed to do that, you've then got to go and operate and, be in on the ground floor and put all your eggs in that basket and help that business every single day with your skill set. And, for me, certainly the first two bits are hard enough, and I certainly haven't got the skills to then be able to do part three. But I think they can be incredible places for people to learn a lot, right? I think Naval Ravikant, the angel investor out of the West Coast, he talks a lot about, being able to learn things or putting yourself in positions where you can learn things that society haven't really taught people how to learn yet, because it makes you unique, right, going forward. If you can go to school for something, chances are lots of smart people can go to school for the same thing, and you're going to have the same skill set as lots of other people. Whereas if you put yourself kind of in the front lines, facing the fire at an early stage startup and the chaos of it all, that skill set is not one that you can pick up anywhere else. So I have huge amounts of admiration for people that go through that and come out of the other side. So I think you can learn a lot, but you have to go in with your eyes wide open.
Well, Reid Hoffman, the founder of LinkedIn, has that quote where he says, doing a startup is like throwing yourself off a cliff and building a plane as you're falling through the air. And I quite like that.
Yeah, absolutely.
So let's move on now and talk a bit about inspirations on your career to date. Is there a particular book that's had sort of disproportionate impact on you and your decision making?
The reason I'm pausing for a second is there's kind of so many, right? And they kind of they've affected my life in quite different ways. I mean, an obvious one that kind of comes to mind is, and this is one that I think lots of people probably would have heard of. It's a book called Surely You're Joking, Mr. Feynman. So this is the Nobel Prize winning physicist, Richard Feynman. It's a wonderful book. I'd recommend it to everyone. And for me in particular, I think it was, the reason I bring it up is one of the first times, or probably the first time, that I realized, like, you don't have to be so serious all the time to be like a real life adult. The fact that he was able to go around, doing the really important and grown up things he was doing, like working on the Manhattan Project and, helping with the Challenger, disaster investigation, while at the same time being like a weirdo, like bongo player, and cracking people's safes just for fun, at Los Alamos. That was pretty interesting to me. And, growing up, seeing adults always being very serious, this is the first time I was kind of like, okay, you've got permission to not be so.
So that explains all of your crazy adventures, throughout university.
I think that a little bit, yeah. That a little bit. I mean, the more directly on the adventure stuff, like, I quite enjoy reading kind of books from like the early 20th century about like adventurers back then, right? So the likes of Beryl Markham, who was a female pilot out in I think she was based in Kenya in 1930s. Even like Roald Dahl, right, and the sort of his history in the RAF, and I think it was a time where basically we had the machinery to be able to fling ourselves around to anywhere in the world, but not the like communication infrastructure to really back it up. And there's something about that's really appealed to me, and I definitely think that reading about some of those stories has inspired some of my stupid decisions.
And what about a quote? Is there a particular quote or maxim that you've...
Now, this one I did prepare because there's one that stuck with me actually for quite a long time. I think it was probably university when I came across it. And I'm a bit guilty. I feel a bit guilty to say that I've not actually read the book it's come from. So this came from a Robert Heinlein book, the sci-fi writer. And the book was called Time Enough for Love. It's one of his sci-fi novels. And like I said, I've not read it, but I came across a quote somewhere, and it was like specialization is for insects, right? And it's this premise that humans should kind of be able to do and experience anything, and overly specializing is not really a fun place to be. Now, whether or not that sound career advice, I'm not entirely sure. And actually, in the last 12 months or so, there seem to be a number of books out there, right, about the benefits of being a generalist. I've not read any of them, but at very least for me, I think being able to experience a wide range of different things makes for a happier and more fulfilling life.
That's really interesting because I'm a big fan of Luke Johnson, the founder of Pizza Express, and he writes a lot about this idea of the Renaissance man being a generalist. The Renaissance man was someone who had a wide range of interests, did loads and loads of cool things. But then the Industrial Revolution hits, and we all become specialists at doing one thing. So it's quite nice to think that actually, post-Industrial Revolution, we're opening up a bit and we're becoming more interesting.
Well, it's more fun, isn't it? It's you're just why sort of carry on doing the same thing time and time again, where there's so much to explore in the world. And like I said, it probably won't make you the best, like the absolute best at anything in your field, but it depends on your personality. I certainly would prefer to experience a bunch of different things.
Oh, I like that. I haven't heard that quite. What about favorite interview question? And once you've told us your favorite interview question, how would you then go and answer it yourself?
Like a job interview?
Yeah.
Actually, so we just went through a round of hiring recently, and one that I like to ask candidates towards the end of the process was have you ever taken a risk that in hindsight just like made no sense, right? So you've done something in pursuit of achieving or gaining something that you realized afterwards, whether you won or lost, it kind of doesn't matter, but you realized afterwards like the downside risk just like massively outweighed the upside, right? And in hindsight, it made no sense for you to pursue that risk. And the reason I like to ask that was, there's a number of reasons. Firstly, you get a real sense of what people care about. If they're willing to kind of throw it all on the line for something. You get a sense for what they're willing to do about that thing that they care about, and how much they're willing to potentially give up. You really get a sense of like their self-awareness and their ability to reflect on past mistakes, and a sense of their personality as well, right? If someone says, I once ordered a coffee with alternative milk in it, it's probably not that interesting versus some other stories. And there's been some pretty interesting answers. There've been some like not particularly interesting answers as well. But that's always a fun one to ask in an interview for me.
And how would you answer it?
Actually, I'm not sure if you and I ever talked about this, Fred, because this was so about 2 years. No, not quite 2 years ago. About a year and a half ago, September. In fact, I remember September 29th, 2019. As you know, Fred, I've been into photography and travel and all this stuff for quite a long time. And I had been to Iceland twice before this date. And I loved it every time, right? The first time I went with my now wife, Irene, and the second time with my parents. And I had a couple of, I had about a week off work. So I thought I would go and explore the Icelandic highlands, the interior highlands where I'd never been before. And I thought I'd go on my own with my camera and my drone and all this sort of stuff. And maybe I did. Let me know if I've told you the story, Fred. But essentially, it turned out that in order to get to where I was going, there were a number of rivers that you kind of have to drive across. And to cut a long story short, I ended up getting my car stuck in the middle of one of these rivers. It looks, yeah. The blank
I haven't heard this before. I haven't heard this before. On the edge of my seat, though.
Yeah, it's that was pretty harrowing, and
no one else was around, I guess.
No, it was just me in the car. I mean, on the way there, I definitely there are a couple of points that would have been obvious, like stop here points, right? So I bumped into another car. There was a river that he decided not to cross, and I was like, you know what, I reckon I could do it, and went across there. That's probably a point where I should have reassessed what I was doing. There was another point where I came across a local like truck driver who was going the other way in this like massive truck, who kind of said to me like, I wouldn't carry on if I were you. And I was thinking in my head like, well, if this guy's saying it and he's a local, I should probably listen to him. So I was all ready to turn around. And then he goes, you can go have a look if you like, but I don't think it's a good idea. And then going off and having a look was of course what I decided to do. And once I got there, poor decision making took over. And I'll show you a picture after this is done. But long story short, I was halfway through this river, and the car got stuck. Water came up to kind of my, not quite my chest, but certainly like my middle, as it were, in the car. I'm not a strong swimmer anyway. Waded out of the car, somehow managed to scrabble my way out to the to the side and onto dry land. And at this point, I'd been driving for 6 hours that day, and it was getting dark, and I was in the middle of nowhere, right in Iceland. It's getting dark, it's getting cold. I'm very lucky that I found the tiniest bit of mobile signal quite quickly, actually, within about 10 minutes of scrambling out of this river, and managed to get through to the police, and the mountain rescue team came and got me like 4.5 hours later.
Wow!
But that was one where I was aiming. There was a particular mountain I was aiming for because I wanted to go take pictures of it. And I'd spent all day driving towards it. I had absolute like target fixation on what I was headed to go and do. And of course it just made no sense, right? Like that could have ended very badly for me. Lots of lessons learned from that.
Wow. And just very briefly, what form did the mountain rescue take? Was it a helicopter or was it?
I know they had this, like, I can only describe it as like a monster truck, right? It's this huge, like, massive tires kind of thing. And yeah, like I said, it took them about 4 hours to get to me. I figured out afterwards, I was looking at a map, and it would have been a 3-day walk to the nearest like civilization, basically.
Wow.
So that was pretty hairy.
Wow. I can see why your wife's not particularly keen on a future adventure with you, Zihao.
Yeah, it's her and lots of other people.
Cool. Well, that's all of my questions. I do have a question from a woman who's part of our growth community, and she has a finance background, but is quite interested in how startups are valued. So her question is, I imagine the startups you look at are mostly young and may lack a significant track record or historic financials. What is the key to valuing the potential of a startup when there are so many unknowns and such scarcity of information?
Yeah, sure. So there's no right answer to the valuation of a startup is how I and lots of other people would approach it. If anything, the valuation is almost exhaust data, right? So what I mean by that is there are three things that you would typically look to triangulate when you're doing a funding round. It's the amount of cash that the business needs. It's the amount of dilution that the existing shareholders will take. And out of those two things, you can derive a valuation by dividing one over the other. And out of those three things, the valuation is the least important one, right? So, clearly how much cash you need to get to the next stage to be able to de-risk the next, 3 or 4 big things you're looking to de-risk. That's really important. The ownership stake of the team is really important. You want to make sure that you're not diluting them too much, but at the same time, you want to make sure that you're getting a decent enough chunk of the business for the risk that you're taking on, right? And once you manage to, set those two parameters, the valuation kind of backs out of that. The other thing to think about is quite often when they're competitive deals, the valuation is kind of just the market clearing price for the round. It's kind of £1 or £100,000 or £1 million higher than what the next most high conviction investor is willing to put forward on a term sheet. So it's really not a science. Now, the things that people will look to be able to give a rough estimation will be some of the same things that lots of people look to value other businesses, right? So you'll look at market comparables, you'll look at the gross margins of the business, its growth rate, all of that sort of stuff. But if you were to plot all the valuations of the businesses on a chart versus all those parameters, you're going to get a huge amount of fuzzy noise around it, because there's all of the softer things that is harder to put down in science, right? There's the history of the founders, there's what they've managed to achieve and how quickly they've managed to do it. There's the size of the opportunity, how much you believe they can grow the business within the next however many years it might be. There are kind of too many parameters to state, really. So the two things that I go back to are, get the cash right and get the dilution right, and figure out what the market clearing price is going to be. Awesome.
Well, thanks so much, Zihao. It's a real pleasure to catch up as always. And I think our audience is going to find this chat really, really valuable. So,
thank you, Fred. Great to catch up. Nice to see you.
See you soon.
Cheers, mate.